Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. Just going to knock our standard disclaimer out of the way before we get started here. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right. Tonight's topic is a very timely topic for inclusion in the summer months here, where we have a lot of chop. We've got tight range days. We've got, let's just get on to some charts here and look at some ways that we can sort of defend ourselves and make money through the summer months, in particular at the open, because I know the open is still an issue for some of you, and those of you listening to the recording. Let's get over here to screen one and let's start off with this. And at the risk, okay, so this is the YM chart. We do have a few new faces in here. This is we trade pretty much in the room. We have four instruments. Everybody knows YM, the Russell. Gary trades heavily. I trade NASDAQ primarily in YM. Occasionally some crude trades. And then of course we have crude oil. We're going to look at all those today. All right, so what is the first thing that we do when we pull up our charts in the pre-market session? So everybody knows, if you're new, of course, here I'm in California. It's all Pacific time. So midnight Pacific would have been somewhere over here. So this was the European session. What's the first thing we do when we come in and we start looking at our charts? The first thing we do, that I do, and we all should do, Gary does, we draw our lines. Good. Check the highs and lows for a trend, and we draw our lines. Good. All right, so I'm going to help us out in the interest of moving things along here. I'm just going to go ahead and put some lines on here at the swings. So I usually start from top to bottom. It doesn't matter, however you prefer to do it. There's obviously a swing up here. That was the European overnight session swing high. More recently, however, you can see that there is another very clearly defined swing just underneath of it, more or less in this area right here. So from a range point of view, this is more or less the top resistance areas. Yes, but we all agree on that going into the open. Now I would draw a couple of lines at the bottom, simply because at the open we don't really know what direction it's going to go, right? So it's pretty clear we have a lot of support down here. That's the swing low from the European session, down in that more or less right around the 390 area, down in here. And then I would go ahead, I'd put another secondary support line. Can you see these? Here's maybe I can help just very, very quickly. What I look for when I draw these lines is I start over here. This is the open in the market getting ready to start, right? And I just scan backwards. And I start looking for candles that sort of coincide with some areas. I look for maybe little shelf areas like this. See some little shelves and little shelf, a lot of candles kind of right in here. I'd go ahead and put another support kind of area right in there, more or less at the 410 level. Kind of right in there. Everybody see that? Everybody pretty much kind of understanding why I'm putting those lines? Any questions on why we're putting those lines kind of where they're at? Yeah, everybody sees it. Okay, good. All right, good. So just very quick calculation. This doesn't need to be incredibly scientific. Our rule of thumb is 20 to 25 ticks or more is pretty much considered a tradable range. And do we have that? Well, from the outermost swing 90 to here is almost 100 ticks. So no question the outermost range is tradable. And the innermost range, you've got, 410, 410-ish, kind of in there to 55. The inside range is also 40, 45 ticks. So to answer your question, yes, this range is tradable. Then the question becomes, do you want to trade it, and how are you going to trade it? Now, I'm going to advance the chart, and we'll talk a little bit about that. Now, generally speaking, and our rule of thumb is there are a question coming in from Dave H. What determines where the colored bars paint? There are algorithms in the scripts, the paint bar scripts, that more or less tell the bars what colors to paint. Hey Diane, no problem. We're still kind of getting started. You haven't missed a whole lot. We're just a couple of 10 minutes into things here. This is our first chart. We just put some lines on it, so you haven't really missed too much. Generally speaking, and this isn't always true, you're going to find that when you see bars kind of huddling around the midband, let me show you a couple examples, like kind of in here, kind of over here. Most of you have probably already noticed this, but when bars start to go a little bit sideways and they're kind of hanging out around the midband area, they tend to go yellow. Now, that isn't always the case. I'll show you some exceptions, but generally speaking, that's kind of what it is. And you may be in a trend and you're in a retrace condition, so you're still looking for shorts, as we did over here with the retraces taking shorts on the downtrend move here. Probably would have been tough to trade this at 230. This might have been some event over in Europe, something that spiked it, some news or something in the European session that causes the equities to spike like that. But yeah, you can see generally speaking when the bars are a little bit sideways and they're hovering around the midband. This is a really nice box right here. You see this one? That box right there. That's just a beautiful textbook midband box. Nice and coiled spring right there. Yeah, so that, and then generally speaking, when you get into a trend, the downtrend would you would see primarily red bars, and then the red stealth shows up, this little sort of snaky looking line. That's the stealth. We still have that. We created that many years ago. Yeah, and then when you're in prevailing, if the trend is primarily up, then the bars are going to be blue. Everything, background's green, stair stepping up. So you have your up, down, and your sideways. Now here's an example here. Are you asking about the midband and the other bands, or the midband coloration, Dave? Colors? Was that your question? Yeah, here's a case where we're kind of sideways at the midband, but the bars are red. So that happens occasionally. Yeah, so inside of the band script are algorithms that look at the trend and whether we're sideways or not. Now you have a couple of different. Let's talk about this, and I guess that'll kind of play right into what we're looking at as far as trending, and so visually that's a good call, Dave. Let's go ahead and start with that. There are times when the midband, if you want to use that as kind of a guide, and it is a good guide, when the midband is stair-stepping down, signifying that we are in a downtrend. Of course, we know how to trade that with our retraces, right? Now, punctuated within moves like that, and I'm going to use this in a couple other places as examples, we do have sideways range-bound type action. And there are different colors of the midband. I'm not get too much into them. Just visually, you can see it. Like here, we went sideways for quite a while. And when that happens, a couple of things you notice, the midband doesn't pretty much go anywhere. It just flattens out. That's visually a good sign. And you can put the predictors on. You get to notice the predictors are all kind of clustered in the same areas. In the case of a downtrend, your predictors are stair-stepping down along with the midband, right? Over here, for instance, you can see that going into the open of today's session on YM, we were more or less flatlining inside of the range there, and the midband was flat, like such. Now, we're going to see the importance of drawing these lines ahead of time. As long as, and I ask this in every single webinar, okay, and almost everybody usually gets it right, we would all agree that as long as this market remains within the confines of these lines, it is said that it is not in a trend, up or down. It is range bound and sideways, and we have to trade accordingly. Now the rules are, in regards to taking mid-band region boxes, where we would take the OT tool and draw a box at the mid-band. Let me get this out of the way. We all know it's flatlining. Generally speaking, if you are in a very tight range, you would not want to do that. And when I say tight range, let me give you an example of what would be tight. Let's suppose that this didn't look like this, that it looked more like this. Just hypothetically. Let's say that was your range. So what we're saying here is that by the time you close out of a box and you get to a resistance level, there's no meat in that trade, right? There's just no meat in that trade. I mean, by the time you get filled in slippage, you might maybe get a scalp if you're lucky. Same thing down here. If you were to say, okay, it's the open, I'm going to trade both sides. So it's really, and visually you can pretty quickly figure this out, is you just put your line at the support, put your line at resistance, and do a quick calculation. The mid-band's here around 30, 33, and resistance is at 44, so that's what, 10, 11 ticks maybe? And then support's down here at 24, 25, which is only about 9 ticks down. So when you take a candle close out, let's say that you're getting long on here, you know, by the time you get filled, you know, you're long on that bar right there, and then you bip up. I don't even know whether you would have got 5 ticks out of this, and then it comes right back in your face. So, you know, if the range is this tight and the mid-band is in the middle, it's generally recommended, you know, you're not going to want to take mid-band trades. You have to really decide if you're going to trade that range at all, because this is right on the cusp. This example here is right at 20 ticks, or even if you drew tighter like that, that would be less than 20 ticks, so not really tradable, especially not the mid-band. Just remember that, okay? When the mid-band's right in the middle and the range is super, super tight, we're going to avoid that. Yes? Everybody clear? Okay, now now let's take this away. Now in our case, with the range more or less our 4 lines here positioned as such, with a mid-band box, would a range like this be acceptable to go ahead and trade with the condition we had today, this morning, with this condition right here? Is this more acceptable from a mid-band region box trading point of view? Can you trade the mid-band on a range like that? Let's do some quick calculations. Okay, support's down here between, I don't know, maybe 13, 15, something like that, and resistance is up at 54. So between 33 and here is almost 21 ticks. From to the upside, you can just visually just check that, right? And then to the downside, if you allowed it to trade both ways at the open, if it got down to here from say 30 to here is 17, 18 ticks. From the mid-band, it's closer to 19 or 20, and then down to the you know, if you were to go to the outer ones, that's obvious. I mean, that's pretty obvious. That, you know, those are actually very good trades. So yeah, the answer is when you have a range that's much larger than 20 ticks, say 30 to 40 ticks, the mid-band is acceptable because there's enough meat to get filled and then actually not only get a scalp, but if it continues to move, you could get some runners. Yes? So that's our rule of thumb. You can see how important those lines are, because if you didn't do these lines and you're looking at mid-band trades with a range, first of all, it'd be tough to see the range at all, to be honest with you. You know, if you went on without any lines, it'd be tough to see it, unless you were just looking in the room and Gary put it on there. But you should, by all rights, everybody knows you should do the lines right on your own charts if you're going to, whatever chart you're trading, because then you can do these calculations and you can say, okay, yeah, I got about 20 ticks down to here, I got almost 20 ticks up to here, but mid-band's okay, I can go ahead and take that. 414. If that was the open, asked Mindy. 414. Are you referring to this box right here, the one I drew in? If this was the open? If that was the open, hypothetically, with that box that painted like that, yes. Oh, box at the bottom? Well, I don't know that I would box it here, Mindy, simply because it's the bottom of I mean, there are, I would wait. And the obvious reason for that is that what do we call this? What do we call this move right here? What is that called? When the market does this, anybody? When a market does this, or when a market does this, or a market does that, or this, what is this part of the price action move called? It's the thrusting part, right? And so what's our rule of thumb? Remember, we talk about that in every webinar almost, pretty much. What's our rule of thumb on thrust moves? We don't take them, right? We have to wait. We are retracement traders. Just kind of, if you can, sort of file that in your memory bank and try to muscle memory that every time you see these moves, whenever you see thrust moves. And let me give you a really easy way to figure out. Some people might say, personally, I don't like, let me give you another rule of thumb, Mindy, and the reason I'm looking at it, there's many reasons why you wouldn't want to box that in. Now, you might say, well, look at this thing. It bounced right off of support, and it took off like a rocket. And if you saw the bottom of the range was here and you wanted to box it, in this particular case, I would probably take a reversal to the upside, because what might happen here is that it breaks support by a little bit, you get faked in, and then it flips on you. So just be careful doing that. I much prefer region boxes that are located somewhere around the midband. I mean, there are occasions where it would be far away from the midband, but not too often. Normally, they're going to be centered kind of right around in here is the sweet spot for those. Okay, that's just for me personally. I mean, you can experiment with this. If you're at the bottom of ranges and top of ranges, and you see, I mean, you could, if you wanted to make the case on that, you could say, well, okay, well, I'm trading the top of this range up here, and I'm looking for a reversal, so I would take shorts up here, right? Right? Every time it came up here, I would box that and take the short. Yeah, Mindy. Yeah. So in a range where this becomes a little more challenging, where you're out, at the bottom of a thrust move like that, is when you have a strong trend. You have a strong trend. You got many, deep thrusts and way big pullbacks and big thrusts, and you have to be careful with that. But in a range-bound situation where the support and resistance are very clear, that's a little bit different. Yeah, that's kind of how I look at it there. All right, so here we go. We're coming up on 6:30. Market's kind of looking like this. So here we have a case at 6:30 Pacific where the YM instrument is sitting right at the midband with a box. Should we take that, yes or no? Right here. YM midband box right at the open. Here's our condition with our support and resistance levels. Can we take that, yes or no? Is this acceptable box to take at the open on YM? What do we think? Yes, absolutely. And we did. We boxed it, remember? Now, what was the first trade we got? Okay, chopped around a little bit, still in the box, and we got short. Remember? Right here. We got short. Now, the scalper target was achieved. It hit this little swing that we had drawn in, broke it by a tick or so. Right? See it? So we're good. And then let's see what happens after that. Stand by, I'm going to advance the chart. Okay, hold on a second. It's jamming up on me a little bit. Let me advance the chart. Pop down to the scalper target, and now let's see what happens next. I remember this trade. There we go. There we go. It's breaking loose. All right. Now, what can we make note of when YM got down to here? Just visually, what do you see? What's going on down here? Anybody? What's going on down here? Where is it at? Where is this market located in relation to what we did in the pre-market session over here? Remember we drew these lines? Why do we take any time to do those? Why do we even do that? It's support and resistance, and it's hitting the bottom of the range. Yes? So what are we expecting to happen here? I think everybody in here would admit this. Some of you might not admit it, but I think many of you would. When you see a market that's doing this after the open, and maybe you got the short or maybe you didn't, you're thinking what? This baby's going to plow right on through that puppy and take it down. I'm going to get a 100-tick run, right? How many of you think that? Be honest. How many of you think that's going to tank? It's tanking. Going to take that puppy right out. Flush the toilet, Hardy says. That's what Mindy's thinking. All right, now let me make a suggestion if I can, okay? And this might help with this, what's happening is that, and it's only logical for most traders, almost everybody, to feel this way, that when a market is thrusting and moving in a given direction, our natural tendency is to expect follow-through and the market just keep going in that direction. We know that's not always the case, right? Yeah, you have a short bias in this particular case, right, Hardy? You have a little bit of a short bias, and the expectation is follow through to the downside. However, let me make a suggestion to you, and I want you to watch this on your charts, okay? Many, many times when markets come into support areas, what are they going to do? Even if they're going to tank, even if they're going to completely tank and take that out, what normally do they do first? I'm being hypothetical on you. Before it was going to do this, and it's at a support level, and it's sold off from up here, what's it probably going to at least do? Something of. Think about it for a second. What's it going to do? This is where we want to engage our thought process. We don't want to just sort of mindlessly look at charts kind of moving around and then, what am I going to do? You got to analyze. You got to think a little bit. It's probably going to bounce. What's happening is the algorithms and scripts and banks and traders all over the world are seeing the same levels that you do, right? There isn't any kind of mystery here. These are support, and they might tie into, pivot levels, which a lot of traders trade. So yeah, what's going to happen, there's going to be some short covering down at support. And the natural tendency when you get short covering is to create an upward movement because they're buying back to cover. So we're going to get some kind of a bounce. Let me put it this way. There is a strong likelihood that there will be some kind of a bounce. The question is this: we don't know how far it's going to go, and we don't really know if it's going to hit its head and roll over or go back up here to the mid-band and quite possibly all the way back up here. We don't, at the time this is happening at 6:45, so the market's open about 15 minutes. We already had one nice short trade set up that we took, the mid-band box, came right to support, got a beautiful trade out of that. And as it's hitting support, we don't really know. All we know when this happens is it could go down, it could sit here, or it's most likely going to get some short covering and push it back up somewhere. Yes? So the reason I spent so much time talking about this is that, I really would like everybody in here to, really start putting in some serious thought. When markets move to certain areas and we're making comments in the room and observing it, and we're trying to take trades, and you're watching your charts and you're taking trades, that you really think about, what's happening, what is actually happening there, and what is the most likely scenario to come out of it. Normally we will say something about it, but you should be also thinking in your own head about it too, right? Okay, enough said about support. let's see what happens. All right, we're starting to pull up a little bit. We're checking this upper sort of little resistance area. It's coming to check it, coming up to the mid band, coming through the mid band. We're at 858. We're almost at 7 here. And where does it go? Where does it go? All the way back up here. Now, you know, I can't remember. There were so many trades this morning. I do remember the one at the open. You know, you might have had a minute or two to put a quick little box on that. I can't remember what, to be quite honest, I can't remember what we did. You could have put orders in here. There's all manner of ways you could have got up to here. But the important takeaway here is that our expectation of short covering in a bounce, what happened? It absolutely did that. Came right within a couple of ticks of support and bounced. Now, when you're short on ranges and you're coming into support, you can either close it out when it hits it. In other words, you can have standing buy orders to take your stops out. Or what we do is we generally are going to crank. We start off with loose stops, and then we crank them down. Would have been stopped out right there, you know, within a few ticks of the bottom there. Yeah, it was kind of a little bit of a double bottom there, Hardy. We came down, boom, almost get that 390, boom, double check it, and we come up, you know, take out the mid band and come all the way almost back up to so if you caught, you know, if you caught the mid band area, you got a nice little long pop here, maybe 20 ticks. So it's still, what is it doing? Are we still in the range or are we broken out? What do you think? Right here, 7 o'clock, 7:10. Are we still in the range or are we broken out? Still in the range. Good, 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 good. We're still in the range. We all agreed. We took a secret pact and a pinky swear that as long as we're within the confines of these lines, it is said to be range bound. We are in the range. We've not broken out. There is no trend here. We're still in the range. Good. All right, now let's go ahead and advance the chart and look at a couple other things here, and then I'm going to pop a couple of different charts up. All right, so we come up. We don't quite get to that 50. I remember it's stalling out there. I do remember that. We come back. We check the mid band. We bounce. Check the mid band. Bounce. Go up to break it 50. Now in this condition here, I want to ask a question. Are we still in the range? Yes. Now support has changed a little bit, right? So you can dynamically make some adjustments. You can say that the top bottom of the range is now technically kind of right in there. You're coming down just under the mid band, and so the range is tightened. It's somewhere around 21, 22, and actually, if you want to be quite honest about it, it's actually hitting 47. I remember this. I remember being in this range. I remember calling this range out live when it was happening. Now here, you got to be deciding whether you want to scalp or not. Scalping here would mean you're buying these support swings and you're taking money at the top. This size of range, I think we all would agree, is right on the cusp of acceptability. I mean, you're right at about 20, 25 ticks. In fact, this is probably the lowest level of size of range that would be acceptable to trade. If it was any tighter than that, you'd have to avoid it. And of course, larger than that would also be acceptable. All right, let's go ahead and advance. I think we closed the room, I can't remember, shortly after 8 o'clock, so the room was closed here. It continued to chop around. Now, I want to show something here, and this happened after the room closed. This is speaking to the whole notion of whipsawing. And this might happen to some of you, okay? And when you see this, you want to try to avoid it. This is one thing I really want everybody to try to see. And whenever I see it, I make sure I avoid it. I'm talking specifically about this right here. This area right here. Okay, I want everybody to look at that. I'm going to blow it up so it's really super clear. Make it really big. There. Now, is that a good box or a bad box? Right here. 843. 8 going into, in fact, did we close? Yeah, okay, the room was closed. I thought I mentioned something about this. Was this a good box or a bad? Is this an acceptable Can we go ahead and take Object Trader and get our region box and set this up to take the trade? No, 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 no. This is a very bad box for a number of reasons. All right, I'm going to draw that line just yet. I'm going to wait for that line. First of all, we all know, just visually you can see it. You don't even have to measure it. You can just see it. It's too big. So, you know, support at 2021 and resistance up here at, you know, 35, 36. So you're looking at anywhere from 14 to 16 plus ticks. So it's huge. It's too big, way too big. Our rule of thumb is 10 or less. We could fudge the 10 if it's tightly packed, and the, you know, and furthermore, let me go on to say this. And I want to be clear about this too. You would not step in here and try to box this in and make it an acceptable good box. You don't want to do this. See? Now let me ask a question. Make sure everybody's paying attention here. Why would you not want to go? Well, Charles, it doesn't make any sense, because you said when they're all tightly packed together, that's a good box, right? So, question to the team: why is this not a good box? It meets the criteria. Let me measure it right here. Let's box it in. Let it trade both sides, right? 9 o'clock. Bottom's at 26. Tops at 32. That's 6 ticks, Charles. That's like a coiled spring ready to pop. I want to take that one. You know, let it trade both ways. See, we got kind of a neutral background. Bars are yellow. That's the box that we like. You said good box, less than 10 ticks. Why would I want to do? Why wouldn't I do that? The outer range is too tight. Good. Pat F. Michael P. Yeah, there's no real. No, okay, so at what point of time did you recognize it as chop? I would say right here, Ed. That's a good question. Okay, here we had sort of a box that you might have done. Maybe you didn't. Maybe you were done trading by then. But even if you did, you would have got a quick short on it. Right here. Because what you would now do, think of it this way: it's kind of a mini version of what we do with these lines right here, right? It's like a mini shrunken down version of what we do with those lines there. You could actually come in. You have now newer swings identified inside of the trading range. In other words, you've got a tight trading range within the trading range. So this box in and of itself. Yes, that was another thing I was going to say. The other factor that we don't talk too much about, aside from the actual size and location of the box region, is just the look of it. In other words, you know, are all the candles kind of, you know, hitting a nice clean, you know, you're able to see they're all kind of wicking to a similar area, so drawing the box is very clean and easy to see and do. When that's not the case, when wicks of candles are all flying all over the place and not, you know, clean, right? You see that? So let's come over here and then let's look at what we thought could have been a potential good box over here. So, you know, it's whipping around, it's spiking up, it's spiking down a little bit, it's all yellow, and then we get this. It starts to get even tighter right here. Why would we not want to do this? I think most of you already answered this. Because it's quite possible that you could get a close of a candle here, yes? And you could get a close of a candle in here, yes? That could possibly fake you into long or shorts outside of that box, but technically have not come outside of the larger box. So when considering and looking at potential chopping action, you have to consider the environment around it. You have to look to the left and find out where support and resistance is. The other factor to come into play, you're getting late in the morning here, right? This is really late in the morning. This is lunchtime back east where volume drops off. You know, they turn the scripts off, traders go out, you know, and so you really, you really want to try to avoid trading when you get over there. I mean, it can't even break this up to get even back up to these swings over here. I mean, at least over here up until about 8 o'clock, at least you had enough good swinging action, back and forth, up and down to actually take good trades. Okay? All right. Let me bring down a nice chart that I think you'll like. Shifting gears here on crude. I think everybody's going to really like this one. I think it's a really good example of how some most excellent trade setups. And I know as soon as you see it, you're going to love this chart. Crude oil right here. In fact, this is crude right now. Stand by, dragging the chart down. 1 second, please. Ready? Here it is. Man, I love this chart. There are so many good trades here. When I see a chart like this, I just get so excited. Makes me so happy. I know there's good opportunities all over the place to take most excellent trades. How about everybody in here tonight? You guys all stoked about this? This is what we like to see, right? This is our favorite type of chart. It's beautiful. Tons of trades. They're all over the place. I'm ready to jump in. I might trade this live right now. What do you think? Anybody doing it with me? You like it or don't like it? My little 2-year-old granddaughter, she doesn't know how to really talk too good yet. She says, "Me no like." Hold on a second, please. Yeah, when she doesn't like something now, she says, "Me no like." This is a me no like chart. This is horrible. I was kidding. I run, Forrest, run, says Doug. There are so many reasons this is bad. I mean, I'm going to try to name a few of them for you. Okay, this is just a horrible chart. Horrible. Mid bands aren't good. I don't see any good box anywhere. All these are bad boxes. Every one of them. Here's a bad box. This doesn't even form a box. I don't know what you call this, but other than 2 spiky spikes. Wait a minute, this is today. Huh. Hey, did everybody know that in the room I hardly called or took any oil trades today? I don't know, maybe some of you weren't in there or didn't notice, but I don't think I took one oil trade. Yeah, because at 6:30, this is what it looked like. It was so spiky. Excuse me. Thinking back, I don't think I took one oil trade today. This was 6:30. You did get a little move at 6. I don't know if Gary took this when the pit opened. Did you guys box this in and take that short? Yeah, I avoided oil. I just didn't even, when I saw what this looked like, I'm like, I'm not touching that. Anybody in the pit in the room with Gary? Did you take this short? Anybody remember? Right here? That would have been right at 6. Well, no, a couple minutes into 6 o'clock. Yeah, Adam, I know you got beat up. I know a couple of people got whack-a-mole around in oil trying to chase this around in this range. It wasn't clean. It was very spiky. Didn't respect swing levels. You see this? Bars shotgunning all over the place. You get fills are terrible. Yeah, I was watching it. I was gonna go take a trade or two. I think Gary was shorting this in here, taking shorts. I know he was. I just stayed away from it. I don't like when it looks like this. I don't want to have anything to do with it. I mean, here's a case where you maybe try to box it in at the mid-band, 7 o'clock. You get a little spike down, maybe you get a scalp out of it, and it comes up, runs up, stops you out, and you try to get back in, spikes you down. Yeah, when a chart looks like this, I pretty much look away and don't trade it. Yeah, that might be part of it, David D. He's making note of the fact that the inventory numbers have been very close to the projections, which is actually pretty rare. Normally they're way off. And when you get those large discrepancies, let's go take a look here. The market reacts very violently. Normally Thursdays, on the day after a Wednesday afternoon inventory or Wednesday morning inventory, move pretty well. But I think they're controlling that. They're controlling the drawdown very, very tightly now. So for instance, let's take a peek here. Here's Forex Factory from yesterday on crude right here. you can see that we were, you know, within less than 10% of hitting that number. Normally they're off by a factor of 2, sometimes in the wrong direction. And that just fuels fire with oil. It just shoots all over the place. But notice here, this inventory, and this is last week's, and it was actually, this actual previous was very close to these two numbers as well as the projection from last week. So you're right, David D. That's a good observation. Their numbers are very tight and pretty close to what they're thinking they should be. So what you get when what you have when you get that is less speculation in oil, which means, you know, a tight range in price, and that's pretty much what you got all day here. You just all day long, all morning long. Here it comes up to the top of the range, breaks it a little bit, pulls right back down through the mid-band, and then goes into the upper range here. I mean, you could make the case if all right, let me ask the question. Let me do this. Before 6 o'clock, where would you have drawn the lines of support and resistance on oil? Let me take the predictors off. Just type in a couple of numbers real quick. I'll give you like 20 seconds, 30 seconds. Where's this? Here, you're coming right up to 6. This is right before. This is right at 6 o'clock. And the pit open is right here. Where are your lines? If you traded oil, where would you put your lines? Which, of course, everybody did, right? Everybody that trades crude in the room with Gary, you had your lines on your charts, right? I see some good numbers coming in. All right, so the top one is pretty obvious. Everybody's nailing that one right up here. You get a little double top right at 76. That's fairly clear and clean, right? Where it becomes a little tougher, and you can't see the price levels. Everybody sees these price levels over here, right? They're big, bold, dark color numbers right over here. And then you got the swings right here. It's okay. I'll show you. So when I'm looking back right here, I see a swing here, a minor one. I see a swing there, and I see some congestion over here. So I would probably put, in terms of support, I put my first level support right in there. Below there, I think we all would agree that there is some support. I put 2 more support levels down in here, and then a final one kind of down at that swing low down there, right down in here. So the tough thing from a short point of view, oh, you're on a laptop. Yeah, that might be a little challenging to see all the numbers and everything. That's okay. I'm just showing where I would put the lines. I didn't trade the pit open, so I didn't have this chart up to trade it. But you know, here again, putting these lines on would help you. I mean, you know, particularly at the open where you saw that the mid-band was relatively close to support and resistance. I mean, tradable, but barely. I mean, what it wound up doing was breaking that support and went down almost to the secondary level down there. And then later it did, and it crashed through it, and you know, came back up and rolled off this resistance. And then you had a couple of background was red, trying to stair step down. So you did have a couple of short trades in there. Let's go over. I want to look at anybody trade NASDAQ in here? NQ, any NASI traders? Anybody trade the NASDAQ market? Nazaru, good for you. Let's go take a look at NASI at the open this morning and see how she behaved herself. Yeah, okay, a lot of people trade NASI. Good. All right, good. Let's go back. Let's take a look at what's going on with Mr. Nazaru here. Now, you know, it used to be that the Russell, many years ago, I don't know if you remember, maybe not many years, maybe like a year ago, the Russell used to lead the futures markets up and down, right? Like, in other words, if you know, if you were short, say, you know, YM or NASDAQ or even ES or EMD, another equity, and the Russell started to retrace and break up and trend change, normally that was a precursor to the other instruments that a trend change might be afoot. So we always watched the Russell, and we would say it was more or less the leader, right? That's changed. And I don't know whether it's the scripts or the traders or what has changed in the market, but it has definitely changed, no question about it. Excuse me, NASI is now the leader. However, that doesn't mean, and you got to be careful with this. What I'm going to say, just to be explicitly clear about this, is you got to trade NASI kind of on her own. Whatever NASI's doing, you trade what you see on NASI, because it could be divergent from the other markets. It's quite possible, and there's many times, and I know you, if you trade NASDAQ, you know this, that NASDAQ can be heading down and all the other markets are heading up, just confounding all manner of reason. Why it does that, I have no idea, but that's changed. The scripts, whatever scripts are trading this, yeah, she gets a little crazy sometimes. Let me get the NASI chart up here. Everybody see NASDAQ here? Here's the pit. Here's the open of the market. Okay, putting our lines on our charts at the open, we would put resistance very clearly up here. Tomorrow morning, I want everybody to put the lines on the charts, yes? What's the first thing we do? I want that to reverberate in your head, in your mind. Got to get the lines on the chart. Good. Now, you can make the case that it's a pretty big trading range here. I mean, you've got support way down here. Where's my line? Yeah, right there. Oops, didn't want one there. Now, you know, you might make a case that there's kind of a sort of interim little shelf area right here in between the two, between, the mid band and down here, that it could check if it was to break support. So I would put the three lines like that, more or less like that on NASDAQ. All right, so here's the open. Is this a good box or a bad box? What say you, team, right here? What is the prevailing opinion on this box right here? Right at 629, market's opening. Here's our levels, support and resistance levels. Take the predictors off of here. What do you think? Just visually, good or bad? G or B? 10 seconds. G or a B? Take it or not take it? To take it or not to take it? Aye, that is the question. Votes are coming in. Votes are coming in. All right, good. All right, everybody says good. No bias. Leaning short. Okay. All right, good. Good. So what was our kind of rule of thumb on the good box, bad box? First, of course, the size and location of the box. So it looks to be just visually somewhere about 8 or 10 ticks. So that fits that issue. We are at the open. It could go either way. It could pop up. It could break down. We don't know. And there appears to be a little sufficient meat here where if we get a break up or down, we might get some decent movement, enough to at least get a scalp out. That's kind of how you want to look at it, right? Can I at least get a scalp out of this and then pop my initial stop down close to where I got in so I don't get bit if it bounces in my face? That's kind of what we're thinking. This is the whole notion of avoiding the whipsaw at the open. Because we don't know. It could spike up here. It could spike way down. We don't know. We don't know. But the key is to make sure we have a nice tight box that fits all the criteria, and we're ready to take the trade. Okay, so here's what happens. Get a couple more candles inside the box. It breaks support. I took this trade. We took this in the room. I don't know if anybody remembers that. In fact, some of you probably took it. Excuse me. Hold on a second. My apologies. Sometimes I get these tickles in my throat. I don't know why I get them, but anyway, yeah. So okay, so we're filled short. Pops right down to where? What is this right here? What is this? What is this little pop right here? Where is it? Where is it touching? Support. Right. We put this line in ahead of time in the pre-market. These lines are already on there. We already knew there was this little shelf of support kind of right in there. Yes, it's coming right to it. So what are we doing? We're scalping. Right? and we want to make sure that we get our stop down. We don't want to have a 12-tick stop sitting way up in the stratosphere anymore here. We at least want to pull it down maybe to just above the mid-band or just above your box there, right? Okay, let's see what happens after that. We come down, start to pull back a little bit. We wick up right to the mid-band. Now, a word to you traders who trade NASDAQ who did not catch the open box. Excuse me. We're at 634, and we get a rollover at the mid-band. What I'm saying is if you didn't get this box, this was your second chance to get in, yes? Right here. That little, excuse me, that little bar flip right there. See it? Comes down, checks the scalp target, checks that first level support at the scalp target, starts to break it, breaking it, checking back, coming all the way down to where? Where is it right now? Where is it sitting right now? We've seen this before, even in this webinar. Not even 15 minutes ago, we looked at this on YM. Remember? Where's it at? We just covered this. Yeah, it's at support. What are we expecting? What are we expecting at least to happen here? Doesn't always happen, but you know, you got to be careful not getting your expectations too set, but we're expecting something to happen here. And what's the most likely scenario of what could happen right here at support? It's probably going to bounce. Now, when it bounced over here, it was a pretty darn good one because it came up, checked the mid-band, plowed right through that, and went all the way up here. That's what NASDAQ does. NASI doesn't she kind of marches to her own drum, so to speak. And if you trade her, you know that. I mean, she's going to do what she's going to do. To heck with all the other markets. And so, yeah, when you're down here, we don't know necessarily we're going to get a bounce, but we know we want to take profits if you're in multiples. We know that, right? If you have multiple contracts on, you're covering some down here, and you're tightening your stops up. You're cranking those stops down because you're thinking there's going to be a bounce, and you don't want to give all your trade back. I mean, the looser stop still could have been up near the mid-band. If you want to see that if it just does a little, you know, it's a judgment call. Everybody knows, right? We got the tight stops, which are generally going to be right in here, and your looser stops are going to be up here. Depends on whether you're the kind of trader that gets in and out, in and out, in and out. You don't mind getting stopped out because you'll get right back in on a roll, or you just want to make this into one continuous trade. All right, here we spike up. We come all the way up, not quite to the mid-band. We roll over, and what do we do right here? We're checking it again. So our expectation was correct. We did get short covering at support, and it had an upward force to push it back up into here. Not sufficient to get to the mid-band or even break it, but we did get short covering, yes? That's what that is. We come down. Now, as this starts to happen and we get up at the mid-band, now we're getting close to 7 o'clock. You know, you could have shorted that rollover, or, you know, with the looser stops, you would definitely have been taken out now, right? Even with the looser stops. And I remember taking this, and I did get stopped out. I made some pretty good coin on that drop. All right, so what do we have right here? Hold on, wait a minute, I might have paused the screen by accident. Stand by. Everybody see my cursor moving around? Cursor moving? Cursor moving around the mid-band? My little arrow moving? Okay, good. All right, I think I might have been paused for a second there. Yeah, okay, so we have another mid-band box right here, right? Bias to the short side. Right there. Comes up, hits its head, fills a short, fills a short. Uh-oh, what's happening now? What's happening now? Now, let me ask this question. And this happened. I remember this happening. This is a good example, and NASDAQ is notorious for doing this. That turned out to be a double bottom down there, Dave. Yeah, that was a double bottom. So let me ask a question. This trade here, let's say you got filled at the bottom of this bar. Let's just do a thing right here. You know, I don't know, 87 3/4, 88, 88, some kind of right in here. You got filled short, or you got this rollover here. Either way, you're short from 88. You know, and you ride it down with a couple of contracts, and maybe you get taken out at 80, 81, 82. That's 6. Times 4 is 24. Times 5 is 120. Times, say you had 2 contracts. That's $250 plus or minus. I'll just say between $200 and $300. One trade, fairly clean, no heat. You know, maybe you did it twice, maybe you did it in a scalp, and then maybe you got a runner. So anywhere from, you know, $200 to $300. How many of you would keep trading? If you made $250, $300 in your first, say, 25 minutes on one trade, would you continue to trade, yes or no? I'm just speaking to each of you individually, personally. Would you continue to trade that, yes or no? Now, I'm saying any market. I'm just saying, would you continue to take any trades in any market? Yes? Okay. No. Okay, quite a few saying no. I'd quit right here. Good. Especially during the summer. 20-30 tick is a good move in the summer, Doug. That's right. That's what I was just about to say that. I keep trading to make up for all of my oil losses. Yeah, you know, I'm telling you, there's days, and it's not just oil. Okay, I mean, any market can go into that chop, and this is a good example right here. I mean, you know, this is what NASDAQ is notorious for, and it can happen at any point of the day with NASDAQ, okay? If you had a tight box here from OT, there might be a case where you got into a short and then a long and a short and a long right here. Here's your short. If you traded both sides. Now, okay, all right. If you were only trading the short side, then you didn't get whipsawed too bad. You had one short that maybe hit a scalp, maybe it didn't, stopped out. That might have been a break even or a loss. If you traded both sides, you got in. Maybe you got stopped out, maybe you didn't. Sort of really depends on where your bottom of your box was there. If you had it tighter like that, that could have been a fake in and get short. This is the whipsawing I was talking about earlier. You know, when you're coming up into here, it's 7 o'clock, and I can't remember if there was news today. Let me look. Core PPI. No, nat gas. No. Yeah. So this is what I wanted to address, especially on NASDAQ. Especially on NASDAQ, is that, you know, you almost once you get through the first trade or two, and you're at 730. Now, as it turns out, look what happened. It breaks up and goes all the way up. Eventually, you do get a nice trade out of the long side. And if you missed all of this, or you got that one short, you may have turned the box off and just watched it and then reboxed it right here like that and caught the long. Because by this point here, you were seeing pretty clearly it wasn't breaking down. You weren't getting follow through the downside. There was a potential trend change afoot here. Did you get that one? Did you get the long, Dave? Hey, just a comment about crude, and this isn't beating up on crude. You know, you know, as I said earlier in the webinar here, I'm really very choosy, and I pick my spots on oil. If I like the chart and I see good setups, I will watch oil and I will trade it. If you saw a day like today, total chop whack-a-mole flying all over the place, you know, support and resistance aren't really clear. It's not respecting anything. I don't trade it, or I might take a very light dip the toe, and if I get bit, I don't go back to it. That's how you control those losses for those of you who got stung on oil, okay? That's how you control that. Don't keep going back to the well. You know, let me go back to that real quick, and then we'll finish this up. Where's oil? I mean, the market was telling you. I mean, it was just telling you what it was doing. And the tough thing is, some people just ignore it, you know, or what happens is, you know, you start saying to yourself, well, you know what, it's going to break all this chop, and I'm going to get a huge run, and I'll make all this money back, right? You know, I'm going to get that runner's right around the corner, right around the corner. Well, by the time you get over here to 7 o'clock, now you're at 7:15. Now you're at 8 o'clock. Has it really broken on and run? No, it's still in the same range it was in before the pit open, right? Where's the big run here? I mean, yeah, I mean, you could have, at the time, well, you say, well, Charles, here's a big run right here, but, you know, if I boxed this, I could have caught this huge run back up here. But at the time that painted, the background was red and the trend was down, yes? Right here. What was your bias on that box? Probably down. I mean, you know, I don't know, maybe you let it go both ways and you caught that. You did have a jaggy pullback here that you might have tried to throw a market order in there and catch a little bit of this spike up, but you're pretty much in this range the whole day. Yes? The entire day was inside the confines of the lines. Even now. Here, where are we at right now? Here, let's go look. Look, we're back down here. And did you catch that or not if you traded after hours? Well, I don't know. Is this a good box? I don't know. Is that a good box? Maybe not. Not so good. And furthermore, when the box was painting here, the background was green and you had blue bars. So you might not even been thinking short, right? All the instruments were pretty much in ranges today, Adam. That's true. All the instruments. And how do you know that? Anybody remember the chart I like to use? Anybody remember the charts? You draw the lines. That's right, you draw the lines. That's exactly what you do. As long as it stays within the confines of the lines, you are said to be in the range, and then you simply have to decide if you are going to trade it and then make your decisions accordingly. If you don't like what you see, there's 164 other instruments to look at. You could pull up anything. 6E, the dollar, 6B's been moving real nice. The Swissy, the yen, EMD. Some of you trade ES. ES moves sometimes. You know, you get a decent pop here and there, although ES was in a tight range all day too. There was nowhere to hide today, nowhere to run and hide. The whole market was just range bound. I think that you know, my personal opinion for what it's worth, let me see if I can create this chart without crashing everything. Okay, I'm going to do a workspace save, and then we're going to wrap, okay? We're right here, a little bit over, it's okay. Workspace save, stand by 1 second. I'm going to create a chart, and we're all going to see this. Yeah, that's what's been happening, Carl, and it kind of gets my goat a little bit. This used to get my goat when I traded stocks many years ago, is, you know, you get all excited about trading, you know, maybe there was you know, news, something happens overnight, or you get earnings reports, you know, what is the hot stock now, so you get ready, pull all these charts up, all these stock charts, and what does the stupid thing do? They gap way up, or they gap way down. You get a huge gap. How do you deal with that gap? All your indicators are off. Well, that's kind of what they've been doing with the futures is, you know, the European sessions and getting some big moves, and then we're left with sloppy scraps at the end of the table. Right? Get your goat sometimes. Tell you what, I'm going to throw up, let's throw up ES here real quick. All right, this is a 1440 minute chart. It emulates a day chart, but you know, when the market shuts down for 15 minutes between 1:15 and 1:30, you don't get those gaps. They're kind of contained within the candle. But I look at this all the time. Now you're going to want to go back at least, you know, 180 days on these. I'm going to create one right now. It's going to take just a second. I use these all the time. 1440 minute charts. Stand by, it's building it. Hope it doesn't crash Ninja. Dave says, I put the lines in for the opening 30-minute range. Yeah, that's good. A lot of people do that, opening hour. I took that, Ed, I came into the room before the open, and I took the I took that mid-band box on NASDAQ. But you know, if you feel like you're getting whipsawed around on NASDAQ right at the open, you can wait. There's always moves after the first 5-10 minutes. Let me show you something here. I'm going to show you ES, but you can do any instrument like this. I'm building the chart. 1 second, please. All right, here it is. 1440-minute chart. Take your and I have an is the average true range ATR. It's just a stock thing, 14 period ATR out of the you know, your indicator package deal there. Now, what do you note on this chart? Well, the first thing that I see is I see a couple of things you can make note of. You can just do a couple of things. Everybody see this chart? Oh no, it's paused. Hold on. Okay, cursor moving. This is going back 6 months, so this is going back into January. And you know, what has been happening to the average true range on ES for the past 6 months? Average true range is the size of the daily candles. From January, here's June. This would have been 1st of June right here. You know, somewhere, oops, put it in the wrong place. Right in here. What's going on with the average true range, the size of the daily candles? After Labor Day. Dried up. In fact, it's pretty clear, and I've studied this quite a bit on not only ES but other instruments. It hit a 6-month low right in here, didn't it? Look at these candles. Look at the size of these candles for the spring. Okay, just look at the eyeball the size of the candles, and now look at the candles here. This is the 1st of June right here. This is what your candles look like now. You're not even getting 20 ticks top to bottom. Top to bottom. They're tiny. Look at these days right here. They're tiny. There's no movement. It's hard to even scalp inside of there. Yes? See them? Look how tiny that candle is. Now, what was this? What are these huge, enormous candles? What are these? What happened? Anybody know what happened here? What was this? Right here. Brexit. These two Brexit candles engulf the volatility going all the way back to where? This is how huge that was, just to give you some insight into how huge of an impact that was. All the way back into March. This one candle engulfed all the volatility back to March. That's 3 months of volatility in one day. Now, what's happened after Brexit? Well, you got a couple of things going on here, and all the equity charts pretty much look like this, but I'll just do ES. You're returning a little bit to summer volatility now. See it? Now, there's another thing to make note of here that you can just see on the chart real quick, is that every time you came up here, what happened? Every time you got anywhere near the highs, what happened? Volume dried up. That's right. Look at the size of the candles when you get up near here. Every time. Every time. Then you could make the case also that now your support is here And it just broke it just for 2 candles very quickly there, and then they recovered. You came back up, you chopped around the top, and now we're putting in fresh all-time highs. This is fresh all-time highs being put on pretty much across the board on the equities. Look at the Dow chart, YM. Look at, this is the E-mini S&P. I trade this quite a bit too. I kind of keep it tucked on the side. Occasionally I'll call some levels out. So the question now becomes, now we're up in no man's land, uncharted no man's land up here. What's going to start happening here? Are we going to continue to get, these nice big swings where it starts swinging up and swinging down, and we get some big days, and it keeps started doing this kind of thing, and we get these nice big candles? Or are we going to return to this? And this, and this. I think it's looking toppy. I think it's going to do a lot of that. And is going to get a lot of capitulation up into this new area. As the markets digest their fresh highs, you're going to get capitulation and chop up in here. That's what I'm expecting. It's going to chop around in here for a while, maybe through the rest of the summer. We'll come back and we'll look at August, end of July and August, and we'll see what she did. I'll leave these lines right on here. I'll save this chart. We'll watch it. And we'll do that if you want to. Each time we have a webinar, we'll pull these up and look at it, see what it's doing in here. I expect some vol, mainly because the Brexit things, if you think about catalysts that are going to move the financial markets, what's left out there? I mean, sure, there's uncertainty in the Middle East, but you know what? There's always uncertainty in the Middle East. When has there not been uncertainty in the Middle East? Think about it. For the past 30 years, there's always uncertainty. That's what always kills me. Newscasters, oh, there's uncertainty in the Middle East. Yeah, for the past 50 years. It's no different today, right? Think about it. Well, now, you do have a good point, Ed. The next thing that's coming up, of course, the variables to think of for the next couple of months in trading equity and oil markets, and gold if you trade gold, is we have the election coming up. We've got, which is very, very contested, hot, this whole Hillary versus Trump thing. So that's gonna fuel uncertainty. Oil prices still, sort of flirting around between 40 and 50. What's going to happen with that? Anything else? The election? Oh, and of course, interest rates. But the Fed, I think, there's a lot of the pundits out there pretty much said the Fed is stuck at 0. So how much more can they do? Who really knows? So I'm going to go ahead and stop the recording.